Folks, Richard Infantino on PrimeTime Money. With the spread of coronavirus around the world, governments are enacting different types of fiscal and monetary policy, which involves printing a lot of money. And we've been getting a lot of questions regarding how does gold react in this type of a marketplace when governments are encountering this type of monetary and fiscal policy. So starting off, we're going to introduce now Nick Barisheff. He's actually an author, a speaker. He's also been a financial commentator. I've known him from back in the 90s. He's had precious metals funds, silver funds, and then he's the president and CEO, of course, of Bullion Capital Management, a management company where you can buy gold bullion directly for your account. So coming up right now is Nick Barisheff. Okay, good afternoon, Nick. Thanks for joining us again today.
Oh, thanks for having me, Richard. It's my pleasure.
Yeah, it's been a long time. I know we've been partnering up in business over the years, and I just, off air, we were just talking, like 1998 we first started doing these calls. So interesting, over time, things have changed a lot. So tell everybody about, Bullion Management Group and what you guys do there.
Well, originally I started the company because back in 1998 there was no good way to invest in gold in your portfolio in the registered plans in RSPs and TFSAs and so on.
Yeah.
And the only thing that was available at the time was the central fund, which is a closed-end fund, and it was missing the major attribute of gold, which is the liquidity. Liquidity of the central fund is how many shares trade a day, which is a minuscule amount compared to the amount of gold that trades a day. So I wanted to do an open-end mutual fund that purchased and redeemed gold in and out of the bullion markets and would always be priced at net asset value without any premium or discount. And that took 4 years to get through the OSC because we needed 6 exemptions to get that done. But ultimately we got it done, and the funds are, because I didn't want to compromise any of the attributes of gold, so we don't market time, we don't lease, we don't hedge, we don't leverage, so on. So it's a pure gold purchase. And through the years, we then went from the original fund, which was gold, silver, and platinum, and then added a gold fund, and then added a silver fund. And we also added a program of bullion bars, so for high net worth investors wanting to buy bullion directly outside of their registered plans, we provide that, and everything from coins up to the big bars. So we have both products and do that. Currently, we've just launched a hedge fund a few months ago that simply, for the theory of the hedge fund, is you hold bullion right now only, and then after the market corrects, which hopefully we will have someday, then you get back into a fully diversified portfolio of REIT stocks, bonds, gold, and silver.
Okay.
So we've just done that.
Well, lots of stuff going on there. The reason we, of course, brought you on is to talk about the, what's happening, with the markets. But again, looking at gold and the thesis behind, investing in gold today.
Well, the main issue is gold's sort of non-correlated to the financial markets. So throughout history, whenever the financial markets decline, then gold goes up, and vice versa. Mm-hmm. So that's why on a normal day you hold at least 10%, preferably 20% in a portfolio, because doing that you'll reduce volatility and improve returns. That's simple. So that's the primary thesis on a normal day.
Okay.
When we get into...
But that's gold, just so the listeners know, that's gold bullion, because the gold shares, this time when it corrected, gold shares went down too. That gold common stock. Right?
Yeah. So mining stock shares, the problem with them is if there's a major equity market correction, you have the mining stock shares initially go down by more than the equity markets. And the same thing happens with REITs. And the reason for that is that they're relatively thinly traded compared to the equities. So if equities have a massive sell-off and there's margin calls and so on, then mining stocks and REITs get annihilated. But then they become terrific bargains to buy at that point in time. So you need to have patience and wait for the correction to play out, and then get into mining shares. Not right now.
Okay. Let's take a break there. When we come back, let's talk about just the overall thesis for owning gold in this type of an environment. Okay.
Okay, sure.
All right, folks, we'll be right back. We're with Nick Barisheff. He's the founder and president and CEO of Bullion Capital Management.